Okay, this is part 2 of setting up an emergency fund or emergency fund setup. In the first video, I discussed setting up the eCash fund, which is the cash that you keep at home for use in emergency situations, and that cash is always readily available. It's designated for nothing else other than use in an emergency situation, and I consider that to be step 1 of setting up any kind of emergency fund. And that's it. The investment vehicle is basically just cash kept at home. And moving over to what is the second pillar of 3 in supporting the emergency fund is the savings aspect. Now, this is step 2, and the investment vehicle for this particular portion can be the high yield savings accounts, money market accounts, treasury, EE or I bonds, and checking accounts. And places that you can keep those are local banks, local credit unions, nationwide banks, and online banks. Now, one of the reasons why you might want to actually have the savings is so that you can actually grow your money a little bit and keep it secure. Banks are still good for that. The money is insured, particularly if you have a savings account. The checking accounts, the government will make good on the treasury bonds. Money market accounts can be a little iffy depending upon what the market is doing. You don't want typically with money market accounts, they don't really guarantee that you will get dollar for dollar back, but that is typically what happens sometimes during severe financial distress. An event such what they call breaking the buck, which means that the value of the money in the money market account actually goes below $1. So you will not get $1 back for the $1 that you put into it. That happens on occasion. It's fairly rare, but it does happen. And the options of keeping it in local banks, that way it's always near at hand. Also with local credit unions, it's just close at hand. And you don't want it so that you can just raid it at any point in time. But you do actually have to make provisions for actually getting the money when you need it. And that's why nationwide banks is also a good option, because if the bank has branches throughout the United States, you can go into any bank across the United States and have access to your money. Now, if you have a local credit union or just a local bank, you may be in California or have to relocate, let's say, using the Katrina scenario, where you had people in Louisiana moving all over the country. If they had their money in a local bank or local credit union, they may not have had access to that money once they got away. Not immediate access, but if they had their money in a national bank or nationwide bank, they could go to the bank branch and get the money directly. Now, I'm sure that even the local banks and local credit unions have ATM cards and such, but they may actually charge a higher fee for that. You actually have to do your own research and look into it specifically. But personally, I just like having access to my money where I can actually go in and talk to somebody and get my money and not necessarily have to rely on the machine to dispense it for me. Which is also the problem with the online banks, is that the only access that you have is through a card. If you don't have access to a computer to actually do a transfer into another bank account that you have physical access to. But online banks do offer higher interest rates than national banks and even higher than most local credit unions and local banks. So by keeping it in an online bank, you can actually grow your money a little faster, since the money in all likelihood will be sitting there for a while. You know, you're just hoping that it'll sit there for the rest of your life, just accumulating more and more cash, you adding more and more cash to it. So that is pretty much setting up the step 2 of your 3-pillared emergency fund. As I said, step 1 was the cash. That's cash kept at home. That should be the first one that you do, or I would recommend that would be the first one that you do. That way you always have access to your cash, grab and go. Cash is king. And then step 2, setting up a insured method of storing your money, because you really wouldn't want to store much more than what you have in your e-cash at home. You know, because this can get up into the the high thousands, maybe $10,000, particularly if you're going to be capable of doing what a lot of the financial experts recommend, which is emergency funds should be 3 to 6 months of living expenses, more if possible. So you just really don't want to have $10,000 sitting in your house. I mean, it can be, if somebody breaks into it and steals your money, then you're out of luck, particularly if your homeowner's insurance doesn't cover it. But in any case, I think I'll wrap that up right now. And in video 3, I'll go into step 3, which is the growth portion, and then discuss how I like to consider using my emergency fund. And just to recap here, the emergency fund use criteria for use in evacuations and disasters: extended job loss, serious illness, or legal duress. I like to keep the number of potential uses for it as minimal as possible. That will lessen the likelihood of you actually having to dip into it, let's say to get your car repaired, and then lose your job, or have to be evacuated, or get seriously ill, or find yourself in legal duress and then have no money in order to fulfill those needs. Alright, thanks for watching, and let me know what you think about setting up emergency funds and what I've outlined so far. This is really not financial advice or anything. This is just informational for your review and consideration as well. Alright, thanks for watching. Bye-bye.